In today's video, I answer the question asked by many startup hedge funds, do I really need D&O or E&O insurance? I get it. Fund managers are risk takers. It's what makes you successful. It's what you do for a living. So I'm not surprised when a hedge fund manager says to me, look, the only reason I'm buying insurance is because a big client, usually a pension fund, requires it. Otherwise, I just go bare. For me, being in the insurance business, this always feels like a bit of a shock. I think to myself, why risk the tremendous cost of a potential lawsuit for a relatively small premium? Rather than argue about who's right or who's wrong, because I really don't think there's a right or wrong in this issue, it's really about perspective, I thought I'd give you my perspective on it. Hedge fund managers face potential liability risks from two main sources. The first are your clients, who can allege some form of malfeasance or wrongdoing when it comes to their money and their expectations of returns based on what's been sold to them. You'll notice that I said can allege because we often think of these types of claims in just their settlement costs and not what an allegation may cost to just defend to the point of being dismissed. The average defense cost associated with a claim that's eventually dismissed is around $400,000. And while you'll pay a good portion of that in your retention, which we'll discuss in a second, you won't have to pay all of it, and who knows how much legal fees could add up to. This is just the average. The second source are other interested parties who may include client investors, partners, creditors, vendors, competitors, and most importantly, government regulators who may allege wrongdoing in the operation of your fund. For fund managers, the dread associated with a regulatory inquiry is only surpassed by the potential costs, which often are covered by insurance. The point is that while the retention or deductible you'll pay out of pocket is typically high, today it's around $250,000, the potential out-of-pocket cost beyond retention is still very high and can easily reach into the millions for defense and settlement. So what's the offsetting premium cost for a hedge fund? Today, for startup funds and those newer funds with less than $100 million under management, we're seeing premiums start around $15,000 a year for the first million of coverage, and the following layers of coverage slightly lower per million. So if you're purchasing a $3 million liability policy, it's not going to be $45,000, but probably closer to the $40,000 ballpark. How much coverage should you buy? We're seeing most new funds start at the $1 million limit mark for the most part. Some funds have clients with higher mandates of limits, which we can accommodate, but generally $1 million seems to be the starting point. Once a fund exceeds $100 million under management, we have a conversation about higher limits on the renewal, and in many cases, the fund managers, now past the startup phase of life, are agreeable to higher limits of protection. Want to learn more? Give me a call, drop me an email so we can schedule a time to chat. My goal is to help design the right protection program to fit your needs today and to keep it up to date down the road while making the process as painless as possible. Thanks.